Yo, what's going on, guys? Bexio back, and today we got a brand new video on the stock market, this time focusing on that. Made a few videos about Plug in the past and even one on Disney, and we're going right back to Disney because I think that is a stock that is got good potential with low risk. So just looking at Disney's price here, this is the daily chart, and I barely ever look at Disney's chart because I don't really care about the price. I think that, things are going good in the future, and it's not something that really moves all that much like a Bitcoin or something. But this line has been the massive resistance. That's $178.91. And we do have this trend line trending up. You see just higher lows happening every time. So maybe a breakout sooner rather than later. Who knows? Currently, before the market opens tomorrow, we're above this line. Want to stay above 180 to be honest, but I think we'll probably dip back down and under this line into this zone here. But the price of Disney is something that I think is extremely undervalued right now because of the theme parks coming back to profitability and the streaming service that I still don't think people are fully pricing into Disney. Disney's market cap here is 327 billion, and compared to Netflix is 247 billion. So Netflix is literally only streaming, whereas Disney has movie making things. They have Pixar, they have their streaming service, they have theme parks, they have Marvel, they have tons of things that are in the entertainment sector, theme parks, all of it. So to think that Netflix is worth almost as much as Disney, 250 to 327. So I mean, like 100 billion, a little less than that. But it's close to Disney, where Disney has so much more than what Netflix has. So with theme parks coming back to profitability, all of these things, streaming service really taking off, I think that just Disney's extremely undervalued. And we can see that here. Obviously, this is something about Disney stock in the Delta variant concern stuff. So, we see theme parks just now returning to profitability. The broadcasting stuff is still stable money for Disney. Makes it easy to subsidize bills. That's a big thing because their theme parks obviously were burning lots of cash, but the broadcasting stuff they have, as well as the streaming service when they introduced it, made much more than enough money to make sure that parks were fine while they were being a net negative for the company. But this is the chart right here that I want to look at this is Disney's revenue and stuff. Operating income actually flipped positive for the first time in at least these last two quarters. Negative 119 million, negative 406 million. But compared to revenue, like 3.6 billion, this is a drop in the bucket for Disney. Same thing goes here, 3.17 billion, 406 million. That is getting to be a little bit more, but it's still not even close to revenue. Like, they can easily take that hit and not even care. But this is the big one where revenue goes up to 4.34 billion and operating income goes positive instead of negative. So this is where we see the park starting to return. So this 4.34 billion on top of operating income just starts to drive Disney, and I think really make Disney give a push for this next level. I don't think that having Disney as a $180 stock, I think Disney is at least a $210 stock, within the very short term. And long term, Disney just continues to make more money, do all this stuff. I do hope they implement their dividend again, at least do something, maybe not as high as everything. They're turning like a growth company now, but at least give some sort of dividend back for everyone that has been involved in Disney. And just an easy Google search tells you about Disney Plus at 116 million subscribers worldwide as of July 3rd, so who knows what the next numbers are going to be. Comparing that to Netflix is at 209 million, so it's not that much more. You're looking at 80-90 million subscribers between the two, and comparing a Disney Plus service that's like a year to 2 years old to Netflix that has many years on Disney. So I just think Disney's growing at such a pace that its streaming service will be able to compete with Netflix at that level, and they would have income from their theme parks and their own IP and entertainment, and that can integrate into Disney Plus, and this just cycle of money where they don't need to pay theaters, their share or split shares with theaters. They can do all of it through Disney Plus. That's what people are really turning to now, is like at-home entertainment. So I just think that Disney is about to really start to see a lot of money being made. And when you look at the analysts and forecasters for Disney, they have about the same thought process. Like, Disney is a $214 stock. That's the average. The high end $255, low end $185. So even the low end is still above where we are now, $180. So 185 lowest. I think that's really undercutting things. 214, I think that is pretty good, pretty spot on. For at least the near term, the next like a year roughly, I think Disney would have no problem getting to this. And the high end 255, if Disney Plus really takes off and we see that revenue really start to generate, then this could be the target where we start to go into that $250, $300 range. If we really see like margins going exceptionally well, the entertainment from home start to really take off, and then they start to really make money through Disney Plus, as well as the theme parks coming back online. And a good thing to look at for Disney, or for any stock, is to look at the insiders when they have lots of sells. Probably a bad time to buy, which this doesn't actually correlate with that. But with lots of sells, usually it's like the insiders who know a lot more than me and you are deciding to sell. They should know more and think, maybe overpriced. But when you start seeing buys outweigh sells, you have 8 buys here, 3 sells, 10 buys. So in total, 4 sells and 18 buys in this time period, from the 190s to 170s. Lots of buying going on. So the insiders think that there's a lot more appreciation in price going to happen other than the downward side. So it does say they sold 100 million in the last 3 months, but these buys transactions are still more than the sells. So I still think that's a good sign for the price and the movement of Disney. And just looking at the market sentiment, that's something where it can dictate short-term moves. And it's very bullish, 90% bullish. It's above the sector average. And that's just short-term moves. If the majority of the market's bullish on something, then that price is probably going to go up, at least short-term. And then long-term, fundamentals take over. And I think Disney's fundamentals look great. And then the last thing to look at for Disney and any company that I like to see is this. You can go to FinViz. This is just like any stock you can look up, or anything really in investing. Institutionally owned is 66.5%. Being over 50%, I think, is a good sign. Like, if institutions believe in it and want to put their money in there, then that's a much better sign for the company than if it's under 50% and much more speculative at that point. But 66.5, I mean, ridiculous numbers for Disney. It looks great. They're just starting to get back to profitability with the theme parks. Disney Plus, I think, is going to be a big game changer that no one's really pricing in. And Disney, at bare minimum, I think is a $200 stock within the short term, and long-term, continually good growth stock. But that's going to do it for this video, guys. Disney looking good. I like what it's doing. It's something that has a lot of growth potential as well as short-term good potential. So it's the best of both worlds right now. And as always, guys, don't forget to smash that like button and subscribe. We're on the road to 1,000 subscribers. See you guys in my next video.